Ladies and gentlemen, good day and welcome to the E-Factor Experience Limited Q4 and FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Samit Garg from E-Factors Experience Limited. Thank you, and over to you, sir.
Very good afternoon, everybody. Namaskar. At the onset, I'd like to wish all of you a very warm welcome to the earnings conference call of E-Factor Experiences Limited for the second half and the full year ended 31st of March 2025. I'd also like to start by thanking everybody for being here today and joining us on this call. With me, I'm joined by a very dear friend of mine and the chairman and whole-time director, Mr. Jay Thakur of the company, along with Mr. Mukesh Agarwal, the CFO, and our representatives from Adfactors, which is our investor relation team. As this is our first ever earnings call, I'd like to begin by providing a brief overview of the company and the exciting opportunities that lie ahead in our industry, particularly for those who are new to E-Factor. So, E-Factor Experiences Limited is an award-winning experiential events company with a legacy that spans almost 2.5 decades. Originally incorporated in 2003, the company has evolved significantly and became a public company entity in 2021 and got listed in October 2023. We specialize in curating and delivering a diverse range of high-impact event experiences, including tourism festivals, a lot of light and sound multimedia shows, indigenous sporting events, concerts, and also at times private celebrations such as weddings for the top-notch illustrious families of our country. And I would also like to mention here that, in the experiential space, we are now actively pursuing our interest in cultural landmarks and spaces for public engagement. At E-Factor, our expertise spans a wide spectrum of destination promotion experiences as well. From designing immersive tourism and cultural festivals, as already mentioned, to high-profile state events, we also create memorable large-scale experiences for central government and state governments, which are approximately 10 to 12 in our client portfolio. Over the last 4 years, there has been a lot of emphasis that we've started to put on the development of museums and interpretation centers, with a strong focus on innovation, culture, and audience engagement. We are now transforming these spaces into stories and into impressions that last forever. Recent developments in the past year. During the year, E-Factor proudly achieved certain path-breaking and landmark initiatives. We're pleased to announce key developments that reflect the company's evolving leadership in cultural tourism, immersive experiences, and destination storytelling, both within India and also on the global stage. It may not be out of place for us to mention here that we are working very proactively with the stakeholders of our governance to bring about the ancient wisdom and transform it into engaging storytelling, both nationally and internationally. One of the most remarkable achievements in the last financial year was E-Factor's participation at the India Pavilion for the World Expo in Osaka. We were at the forefront of curating the India Pavilion at the World Expo 2025 in Osaka, which was done in a joint venture bid with EcoFirst, which is a Tata company. And the expo opened its doors to the world in April 2025. With over 28 million global visitors expected, the India Pavilion is currently observing an average footfall of almost 20,000 people per day. At the India Pavilion, India is showcasing its story through powerful design, immersive visitor experience, and modern storytelling that blends our tradition and innovation. I must also clarify here that the entire creative of the user journey, the interiors of the pavilion, the content, exhibits, and all engagements for the visitors at the pavilion have been done, curated, designed, and done by eFactor. The India Pavilion is expected to be a major highlight at the expo and is a testament to our ability to deliver world-class experiences at a scale which is as large as the World Expo on the global platform. There is a lot of movement that has also happened on the front of our global recognition. Example being the World Experience Summit that happened last month in London. So strengthening our global footprint, we played a significant role at the World Experience Summit in London the last week of April. The company was invited to curate and present a showcase of India's achievements in the experiential domain, placing India firmly on the global map as a hub for innovation, immersive design, and cultural storytelling on a very, very large scale. For those of you who don't know, the World Experience Summit is a global conclave of approximately 800 to 900 like-minded experientialists that gather there under a common roof for almost 4 days. And they come from maybe 50 to 60 countries spread across the world. On the domestic front, eFactor entered in a distinctive realm of permanent narrative installations, experiential structures that enable existing and emerging destinations to culturally redefine their urban landscape and stories. We took its design and architectural vision of the Mahakumbh 2025 with the creation of 4 majestic gateways into different roads converging into Prayagraj. The Sevadwar, the Ganga Dwar, the Yamuna Dwar, and the Saraswati Dwar. These were 4 large public installations as entry points into Prayagraj that were designed and put together by us, and they obviously became a great point of conversation amongst the note givers there. So these were not just entry points, but also very enriched architectural expressions rooted in Indian mythology, serving as spiritual landmarks that guided whatever million number of people came into Prayagraj, amplifying and both of the sanctity and I would say the cultural identity of the Kumbh, the Mahakumbh itself. We're also leading and shaping Maharashtra tourism's various initiatives. This year, as a matter of fact, our unique concept of creating an eco-glamping festival introduced innovative eco-tourism solutions to the people of Maharashtra. Set up in the scenic hills and vineyards of Nasik, with premium glamping, outdoor adventures, folk performances, local cuisine, and a strong eco-focus, the festival showcased Maharashtra as a vibrant hub for experiential travel. Together, these initiatives, I guess, also reflect our commitment to blending tradition, culture, and most importantly, sustainability in meaningful and lasting ways. One must note that as far as eco-retreats and eco-glamping is concerned, eFactor has come a long way in this sector by developing multiple initiatives and business opportunities with stakeholders in the government in this space for the last 4 years approximately. Further, we're taking this initiative ahead. We're also thrilled to share with you that we opened this financial year with a bang with the prestigious Maharashtra Mahaparyatan Mahotsav, a project by Maharashtra Tourism Development Corporation. This approximately 20 crore opportunity reinforces our expertise in executing large-scale tourism events and festivals, as most of you already know. Also, this year we will be leading our endeavor of becoming a major player in the field of creating permanent cultural landmarks. We've recently been awarded the work order to build the cultural center on Rabindranath Tagore at Shillong. This is a very interesting cultural space designed to celebrate the legacy of Tagore through immersive journeys, architecture, and artistic programming. We've also been awarded a one-of-its-kind, very unique project in Concall, which is a suburban, a sub-rural forest area in Meghalaya at Concall. It's the experiential forest zone, which is a curated nature-led visited experience that blends environmental immersion with culture and the narrative design, and again, keeping sustainability and eco-friendliness at the top of its head. Both projects are rich in character and unique in their offerings and are expected to contribute significantly to the regional rural tourism development and also to some extent cultural revitalization. Our groundwork is anticipated to begin shortly, and in totality, both these projects will add approximately, I think, 35 to 37 crores to revenue. And interesting to note is that all of this business, including the recently concluded Maharashtra Tourism Festival, is all accruing now in what mostly used to be the lean time of business for the company. Beyond our established strengths in cultural events, tourism experiences, and destination marketing, eFactor also today stands at the threshold of a powerful growth opportunity in the rapidly expanding religious and spiritual tourism space. With India witnessing a post-pandemic surge in pilgrim footfalls, reaching over almost 1 billion domestic travelers annually, there is immense scope to design immersive, permanent, or traveling large-scale experiences. By leveraging its creative and execution expertise, eFactor is well positioned to reimagine spiritual journeys, transform religious destinations, and contribute meaningfully to India's ever-evolving cultural, spiritual economy. As far as way forwarding is concerned, we're looking to the future with our growth strategy firmly anchored in a few core pillars. First, we committed to geographic expansion, I believe, to unlock new markets, explore better opportunities, newer opportunities, and deepen our presence in the high potential regions. This will also enable the company to tap into very diverse consumer bases and scale our offerings that spread across India and possibly also beyond in due course of time. Second, we're driving cost optimization and trying to operate more efficiently across all functions. This is being done by leveraging technology, employing more competent and more experienced professionals, streamlining processes, and also reworking on improvising resource utilization. We hopefully aim to enhance profitability while maintaining service excellence, and I think to some extent we've been able to exhibit this in our financial results this year. Lastly, important but not out of place to mention that we are also exploring inorganic growth through strategic acquisitions. This will allow us to complement our core capabilities, also help enter adjacent markets, and accelerate growth in different ways. Together, these initiatives chart a very clear, ambitious path forward for sustainable and also, most importantly, scalable growth. Something interesting that I would want to add to these pillars is the recently formulated 10% project. The 10% project is our initiative where we are anticipating to get 10% of the company's top line through our engineered, customized IPs that we intend to roll out. So these intellectual properties, which are spread across cultural narratives, also weddings, and consumerism for youth at large, we hope that will add about 10% of this year's top line to the company. So we decided to call it the 10% project. I think that's by and large all the points that I wanted to cover on behalf of Jay and myself to share with you. And I'd like to now hand over to Mr. Mukesh Agarwal, our CFO, for providing financial and operational information about the company. Mukesh ji, over to you.
Yeah. Hi. Thank you, Jay sir and Samit sir. Good afternoon, everyone. Thank you for joining for the second half and year-end results earnings call. Very warm welcome to all stakeholders who have taken the time to be with us today. Before we begin with the highlights of our half-year end and year-to-end results, I would like to draw your attention to the standard disclaimer. Certain statements made or discussed during this earnings call may be forward-looking in nature. These statements are based on the current expectations, assumptions, and projections are subject to the risks and uncertainties that may cause actual results to differ materially. The results for FY25 have been published and are available on the company website. Additionally, they have been submitted to the stock exchange as per the regulatory requirement. Transcript of this earnings call will also be available shortly in the investor relations section of our website for your reference. Let me begin with a brief overview of our financial performance for the second half of the year, followed by the full year results. In the second half of FY 2024-25, we recorded the operational revenue of 153.41 crore at consolidated level, marking a 21% year-on-year growth. Our EBITDA stood at 26.18 crores, reflecting a 29% increase with the EBITDA margin at 17.06%. Net profit after tax was 19.90 crores, up by 36% year-on-year, with healthy PAT margin of 13%. Looking at the full year performance, our operational revenue reached at 171.55 crore at consolidated level, growing by about 15% year-on-year. EBITDA stood at 26.69 crores with 20% increase, and EBITDA margins are reported at 15.56% at consolidated level. The net profit was at 20.18 crores, up by 31% from the previous year, with the PAT margin of 11.76%. Our EPS stand at 15.42 per share as compared to 11 point something in the last year, which increased by 35% on year to year. It is worth noting that our business typically experiences seasonality, with the first half seeing the relative lower volume of the work. This cyclical nature continues to reflect in our performance distribution across the year. The financial metrics for FY25 continue to underscore the company's strong fundamentals and sound financial management. The net debt stood at 15.21 crore in FY25, where the major part of the debt was the short-term working capital. The net debt to equity ratio remained comfortable at 0.21, up from 0.07 in FY24. If we talk about the return on the capital employed, that stood at healthy 32%, which is reflecting the efficient capital utilization. If we talk about the return on the equity, it remains strong at 28.49%, reaffirming the company's ability to generate the robust shareholder value. These key metrics demonstrate a stable, scalable business with a solid financial foundation to support its next phase of the growth. This is all from my side. We can now open the floor for the questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have our first question from the line of Agastya Dave from CAO Capital. Please go ahead.
Good afternoon. Am I audible?
Yes,
Yes,
go
please.
ahead with the questions.
Thank you very much for the opportunity. So my first question is on the receivables. We showed a 15% increase in our revenues, but our receivables have doubled. My guess is because of seasonality, most of the billing may have happened in March, but can you throw some light on this 112 crore number? And what do you see in terms of receivables going forward? Because the two prior years, these numbers were substantially lower as a percentage of revenue. So if you can throw some light on this entire thing.
No, it's a very, very valid question, and observation is totally grounded. There were two primary reasons, as you rightly said, that yes, most of our business until now used to happen in the second part. But despite that, two of our very large projects, for example, the World Expo at Osaka, it only finished because our delivery was end of March, early April. So that could only be billed just in the last week of March. So that's a large number. And even one of our other flagship projects, which is the eco-retreats that we run at Odisha, they also finish in March. So approximately, I think 75 crores of billing could only be completed towards the end of March. So which is why one saw it skewed a little extra this year. But, it is not to be understood that this will become an annual practice. This was circumstantial and
Understood, sir.
Probably more evenly spread out, yeah.
So the 75 crores of billing specific to these two large projects, in reality, when will you get the money? So let's assume that the billing was done in last week of March. Within 2 months, you'll get the money?
I am assuming that because we've had a healthy cycle of payment with the Odisha government and the Odisha projects of eco-retreats, most of that money has come in the last month, and whatever is balance, I am assuming maybe 15-20% is balance should roll in by the 15th of June. Osaka project, on the other hand, will take a little more time because those were the terms of the tender.
And Mr. Dave, just to add to what Mr. Samir just explained to you, there is another project as well for the Maharashtra government, which is about a 20 crore project where 75% billing happened in the last week. And that is also a payment which has been pending. And what has happened this year is because of the elections in the center and a lot of state clients, especially Maharashtra and Odisha and all of them, they all saw a significant change in the bureaucratic setup and the political setup. So what that meant was the projects got a little delayed. So did the processes. So इसलिए वो मार्च में जाके स्कूल हो गया पूरी चीज.
I understand, sir. This is just a snapshot on a particular day. I understand that, sir.
No, but I also want to add one thing. While the billing for these two projects that I was speaking of happened at the end of March, the projects had a shelf life of almost 4 months. So it was delivery December, January, February, March. So ऐसा नहीं कि वो सिर्फ मार्च की मेहनत का revenue है. It is work that extended across 4 months but could only be billed in financial.
Understood, sir. Sir, in the IPO, in the DRHP, there was a particular mention of certain assets that you were going to acquire, and that was one of the end use of the IPO money. Have we acquired those assets, and how do you see the growth trajectory from now on going forward?
Mukesh ji,
it was No, we were talking about the investment in our subsidiary company, which is of about 2 crore.
Correct, sir. Correct.
that
Correct. And
investment.
you are
Yeah.
acquiring
So
certain balloons, if I'm not mistaken.
let me answer that. So
Yeah.
as Jay mentioned, there are some things, and we've also learned it the hard way. While we've been running a virtually monopolistic hot air ballooning business over the last decade, there are learnings. So we did not want to take very rash decisions. We opened up a new destination, Hampi. We test piloted Hampi on leased equipment before investing fresh. So Hampi has very successfully worked as a new addition. And we are now testing another destination in Uttar Pradesh. I cannot name the place. So and another destination in Rajasthan, at the borders of Rajasthan and Madhya Pradesh. So we've, to be honest with you, we wanted to play a little safe. We test launched these newer destinations with local partners, got them to kind of invest a little. But I think so that investment in additional capital equipment for ballooning should hopefully start later this year. If not later this year, then maybe early next year.
And so in terms of growth for next year, so how do you see things panning out? Especially because I don't think next year's Kumbh will be this big.
So Kumbh was not a lot of billing for us.
Okay.
Kumbh was not a lot of billing for us.
It was about 16 crores, yeah.
Okay.
And
but next year, sir, how much growth?
If I were to keep our numbers a little subdued and not throw out a lot of green light on optimism, we should be able to do a top line of 250 crores in this financial year.
Okay, understood. Okay.
As I had mentioned in one of our earlier deliberations.
Yes, sir, you heard.
To somebody.
So you are maintaining the 20, roughly, like this year was slightly subdued, but next year you are expecting that 250 crores, which you got better growth.
As Jay mentioned, because of the elections, a lot of things got postponed. So it took normally 6 months. It takes away that kind of time, yeah.
Understood, sir. A lot of companies have faced that. Yeah.
And Mr. Dave, I would also want to add, the way we are focusing a lot on the permanent infrastructure that is being, created and executed by various state governments and even from the center being strongly supported. There are huge fundings that have been committed, but these are all long gestation periods. So this year we 100% are confident that we will, in terms of size of the projects, we will be able to capture a much larger number financially. But the billing again, because there will be projects which would need a gestation period of 6 months to 12 months or maybe 18 months. So billing नहीं हो पाएगा. इसलिए वो सब consider करके we just want to keep it, within very achievable limits. Yeah.
Understood, sir. No, 250 crores would be pretty good. That is what I believe you had communicated earlier also. So one last question, sir, and it's also an observation. There was a lot of selling from all the promoters, and it was fairly aggressively done. So is it something that it's not my business to ask why was it done? But I'm just wondering whether that was a one-off thing or should we expect more in the future?
You are a very observant man, Mr. Dave. So when you say a lot of selling, I don't think so. It was
not a lot.
Yes.
Yeah.
It was 4% of the equity capital of the company, and it was done very aggressively. The stock got hammered from 310ish to below 270, if I'm not mistaken. So that's like more than 10%, 15-20% of the market cap and 4% of equity. So that is why I'm saying that it was aggressively done, and it was quite a lot of selling, because it's very difficult to absorb 4% of equity for any company of any size. So that's why I use those words very specifically. And then subsequently, and subsequently, when the disclosures came out, uske baad, I understand SEBI doesn't require you guys to report every quarter, but there was no communication other than those disclosures. And then subsequently, the stock fell by more than 50%. So that's why I was just wondering, is it like a one-off thing? Will it happen again? And I know I have no locus standi in asking why it was done. That's a personal matter. I'm not going into that direction. But I'm just wondering if this is going to be a recurring thing. That's the only thing, sir. And in terms of suggestions, sir, I would really request, I have done this with every company, every SME company. Please increase the frequency of communications. I understand it's a very seasonal business for you guys, so H1 really is meaningless. But all the investors would really appreciate if quarterly numbers are released or at least quarterly updates are given. Otherwise, especially when there is such a lot of selling and there is no communication whatsoever where the company is going, it gives a very wrong signal, especially when the markets are so weak. And we have seen, I think, more than a 50% drop in the stock. It has recovered recently, and the results are reasonably okay. But it's not a pleasant experience, to say the least, for whoever is holding the stock. So that's a request, sir, and a question also.
So, JP, let me take this. I'll take the first part here. No, so at the onset, I would say that we are sorry that you had to feel like this, though the intent was never it. I think we will be mindful of being more communicative, and now that we have an agency that is helping us do this, so we will make it a point that if not 3 months, then at least between 3 to 4 months we do a conversation like this, so that we can keep you more updated and address any questions that may come to your mind. So that is one response to whatever you said. Number two.
Appreciate that. Thank you.
No. It is important because you see, for us, growth has many meanings, and you are all people, friends, investors who are in some way or the other partaking with us in that journey. So we don't want to be elusive, and there is absolutely no intent that we have in our minds to keep things hidden. Number two, as far as seasonality of the business is concerned, as we had mentioned to you in our board meeting AGM last year, we wanted to make sure that this year onwards this changes, and you will hopefully see that the first 4 months of financial year 25-26 are different to what they were in the previous years, and it's a conscious effort that has been made in that direction, so that we don't remain a seasonal business-driven enterprise anymore. That's the second statement I would very vehemently want to make on behalf of the board and all of us, because it's extremely important for us to come out of that seasonality. The other part that you said as far as our selling is concerned, yes, we did sell. There were certain commitments that as promoters of the company we had individually made to certain people historically, and this was one-off. This is not to be considered that it's going to be made a practice. So it is not going to be made a practice, so you can be rest assured, because we ourselves are out there to start building wealth for our shareholders and the enterprise at large. So the behavior of the price, however, is something which is purely market-driven, and I keep on asking everybody that in our sector, where the average PE ratios range between 25 to 30 for experienced and media-driven enterprises, why are we, despite being a more robust and a more legitimate enterprise, which is regularly engaging with the stakeholders of this government to take India or brand India globally, why are we traded at just a 13 or a 14 price equity multiple? Nobody's been able to answer that question to me. So those market sentiments are not really in our hands. I really don't know, because a price of 140, 150, no ways could be justified, but still the stock did touch that price. So that's something that I think the market and my friends like you would know better.
Sir, if you just increase the frequency of communication.
Sorry to interrupt you, Mr. Agastya.
I'm just finishing the point. It's an important point, trust me, for all shareholders. So if you just increase the frequency of communication and improve the transparency, as and when, with time, your track record will be established as a listed company, and people will begin to trust you and bank on what your targets are and believe you. And my only the thing that I can say is nothing survives in vacuum. So if there is no communication from the company, there is vacuum about the company in terms of information, and then that vacuum is occupied by doubts, and that is never good for the PE of the company. That's the only
point
thing.
Well made. Point well made. It will be well noted, as I said to you. You'll hear from us more often.
Yeah. Thank you very much, sir, and all the best for the 250 crore target and the seasonality thing. And operator, I apologize, I've taken too much time, but this was an important point. Thank you very much for giving me the time, sir. Thank you very much. All the best, sir.
Thank you, Mr. David.
Thank you. I appreciate every concern.
Thank you. We have our next question from the line of Prakshal Jain from Lucky Investment Managers. Please go ahead.
Hello, sir. Am I audible?
Absolutely.
Yeah. Thank you for the opportunity. So my question is, after H1 FY25, we were sitting on an outstanding order book of about 175 crores. So what is the order book that we are sitting on as on date?
The current order book, which is spread across the financial year 25-26, I would say is 35 almost. It is in excess of about 100 crores when you say order book, which is confirmed orders on hand. And there are many things which are brewing. Some of them we can talk, some of them we cannot talk about. But as I said, expected to clock about 250 crores this financial year.
Okay. And apart from the confirmed orders, we would have bid for a lot more orders. So, of what amount would we have bid for the pipeline, if I can say that?
Currently, the biddings are I will address that. So currently, the biddings are all under process, and I think we should be bidding in excess of about 250 crore of projects in the next couple of months.
Okay. And so my next question is that it was in the news that the India Pavilion in the Osaka World Expo, it started a little later than the scheduled date. So will there be any financial? First of all, is that news true? And second is, will that be any financial impact of that delayed opening in terms of any retention money being withheld or any penalties?
Amazing question. So glad that people are updated about all of these things, and but we are under certain NDAs, so we can't disclose much. But broadly, I will answer that the delay was not on account of any shortcoming from our side. So I hope this answers everything.
Okay, sir. All right. Thank you.
Thank you. We have our next question from the line of Anamika More, an individual investor. Please go ahead.
Thank you for this opportunity. My first question is regarding religious tourism. So how much it has contributed this year, and what was the margins we made this year, sir? Hello?
So Anamika, thank you for raising this. But one request, I don't think so. We've really delved into the space of religious tourism. I think it was more culturally and spiritually driven. And the total volume of business that we did in this space was what? About 25 crores, Mukherjee, JT, I don't know.
It's close to about, if we talk about 62 to 34%. Yes, about 45 to 50 crores basically we talk about. And the
Which
culture
all
and the
projects
tourism.
are we including here?
So it was the Vijay Utsav basically we talk about.
That is not the religious project. So the Mahakumbh was one. And okay, even if we say, okay, let's say Shakti Vijay Utsav, so both of these put together is what, 22, 23?
23 crores, yeah.
Okay.
Yeah,
And
so
what
50.
kind of... Yes, sir. So what kind of growth are we expecting in this year?
Specifically in this sector, or you're talking overall?
In religious tourism, sir.
I would assume this.
Reggie, I will take that question. Sorry, I put myself
Please.
on mute. Yeah. So, just to give you a number idea, on Prasad's scheme, which is completely related to development of tourism experiences and infrastructure, budget for this year is about 3,500 crores. So what we are aiming is to get a 10% share from that is what we are targeting. So we are working very aggressively in 3 states at the moment, which is Maharashtra, Madhya Pradesh, and Uttar Pradesh. All the 3 have got a very handsome outlay out of these budgets, and it's all listed. So the whole idea is that a lot of infrastructure is being built up everywhere. So the best example is what you see in Ayodhya and Prayagraj. But the thing is that they are all in just the infrastructure, but they are primarily, they all need storytelling. They all need engagement and immersiveness into the whole thing. So that's where the government is hugely emphasizing, and that's where as storytellers, that's the core for us as business potential, and that's where we see a lot of opportunity.
Okay. Thank you, sir. And second question is on financial side that we have the debt to equity ratio has risen this year. So are we expecting any more debt on the books, or we will be on the similar lines?
Should I answer this question?
Please.
Okay, you answer, then I will maybe add a little to it.
So if we talk about, ma'am, there was not a significant increase in the long-term loans basically during the year. If you see, this increase was purely on the account of the short-term borrowings. This, so if we talk about the limits were about 10 to 12 crores were limit were utilized basically during the year. And as we have discussed in the year also, the majority of the billing happened at the end of the year. So technically, we talk about the debt equity ratio will remain in the range of below 0.3 or 0.4 basically.
Okay. So mostly it will be for working capital purposes.
Yes. There will not be any long-term loans.
So just to add to whatever Mukesh ji said, Anamika, see, if you want to grow business, then capital deployed will have to also increase.
Definitely.
Because such is the nature. And we are extremely mindful that we don't cross unreasonable thresholds. But by industry standards, one knows that our debt to equity ratios are still very, very healthy. So as far as margin of play is concerned, it's still considerable margin of play that we have available. But we are mindful. We only expose ourselves where necessary, where there are calculated ROIs.
Definitely. Thank you for answering my question.
Thank you, Anamika.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have our next question from the line of Tanvi from Hem Securities. Please go ahead.
So I just have one question. The first question will be, what would be your margin?
Sorry to interrupt you, Ms. Tanvi. Can you please be a little louder?
Yeah, can't hear her.
Can you hear me now?
A bit better. Can you use your handset?
Yeah. Yes. Hello?
Yeah, now we can hear you.
So I wanted to know what would be the guidance and the growth run rate for the next 2 to 3 years for top line and bottom line both.
So I could not hear you completely, but whatever I could comprehend of the question, you were talking about the growth runway over the next 2 to 3 year horizon. I would assume, as per our last deliberation internally between stakeholders at the board level, if we are anticipating a 250 crore number financial year 25-26, you look at a 25 to 32% growth year-on-year basis, this number.
And for margins?
We should be definitely aiming to achieve the numbers that we have been able to achieve this year.
Okay.
In terms of
So one more
percentages.
question. Can you, from the, the current revenue that you've done, can you tell me what would be your biggest customer or biggest event and how much revenue was generated from the same?
Our biggest customer, I think, continues to be Odisha Tourism for now, and on a single largest project definition. But total billing to them was almost, Mukeshji, what, 45? I don't know the exact number.
44 crores basically we talk about.
Yeah, 44.
So single largest order.
Okay. And so do you have any out of the current order book, what would be your single largest order?
Of the current order book, the single largest order in concurrency of time still continues to be Odisha, which the order would be approximately 46.
Okay. Thank you.
Thank you. We have our next question from the line of Soham from RV Investments. Please go ahead.
Thank you, sir. Am I audible?
Yes.
Yes, please.
Sir, so for FY26, what further orders are we expecting from Odisha Tourism?
Sir, there are certain things we can't disclose because what is brewing is brewing. So till the time it is not confirmed, we are not supposed to be talking about it because of various clauses that we had to sign on undertakings.
Okay, sir. So say this 250 crores we are talking conservatively, this will be the billed revenue for FY26, right?
Yeah, this will be the billed revenue for FY26.
And sir, so this order book of 100 crores we are having, so what is the floor margin we can expect? So at what minimum margin do you, work for the...
See, as you would have observed, even in the disclosures and financial statements that have been shared publicly over the last 3 years, I think our floor margins will remain the same. I'm not expecting a very large variation on that because efficiency, though this year has been slightly better, but if we are able to achieve these numbers, I think we are good. So that is what we would try and achieve and target.
Okay, sir. Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have our next question from the line of Sahil Singla, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yes, Sahil, please.
Sir, my question is regarding the court case you are fighting against the state of Andhra Pradesh, the writ petition. Could you please throw some update on that?
क्या बात है साहब, आप तो बहुत पुरानी खबर लेके आए. So fortunately, with the coming back of the old administration under the leadership of Mr. Naidu, this writ petition that we had filed is now being dealt directly at offices at the highest level. And if all goes well, by July we should get the money.
Thank you. That's all.
Thank you. As there are no further questions, I now hand the conference over to Mr. Samit Garg for closing remarks.
No, so thank you so very much. I think it has been a pleasure talking to everybody, and it has been extremely enriching and rewarding to receive questions. At least, gives us the confidence that yes, people out there are genuinely interested. They care about the growth of the company. They care about what we're doing. So, which is really very nice. So thank you for doing that. And as I said, we will also be more mindful. We will be careful going forward that we are more interactive. We do these deliberations at least once in 4 months or something like that. And so thank you. It's been a pleasure talking to everybody, and thank you for sparing time. I would request Jay to add to whatever I said so that we can then conclude.
Absolutely echo every sentiment shared, SG. Thank you so much, everyone, for spending this time. And definitely, it's like a dipstick test for us about on things that we believe in or we intend to progress in when such interactions happen. And we would definitely want to look at increasing that frequency. And now we have a strong association with the IR agency in ad factors, and we definitely look forward to healthier times as we progress and more communicable and more transparent approach to our own internal processes and external processes. Thank you, everyone.
Thank you. On behalf of eFactor Experience Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.
Thank you.